Good morning, good afternoon, or good evening, and welcome to today's Wednesday, the 13th of September, Bull versus webinar. Steve Miley here on the call for Trade Day. Welcome, everyone. I see some things in the chat from yesterday. Where's the webinar? There was no webinar yesterday. I did announce it on the previous days. On Monday's webinar, I put it in the heads up. Please do check the heads up, guys. It will always be in the heads up. I also put it in the Discord. It's always in the heads up if there's not going to be. So please check ahead. I always put it in the night before if we're not going to have a webinar. So it was in there. I did announce it on the Monday webinar. So no webinar yesterday. Back to usual today, though. Hopefully back to usual for the rest of the week. So let's take a look at what we've got coming up. So yesterday we saw market slip. No massive real driver of that yesterday. But if anything did drive markets lower yesterday, Oracle reported. We're way out of earnings season now, but Oracle reported. Now, Oracle's not the biggest company in the world, but I think the market just sensitive at the moment, and the fact that Oracle, depends on business, kind of business tech, and that they saw a significant slowdown in sales. That was seen as a concern potentially. The potential slowdown we've been looking for, and is it hitting harder? So Oracle sold off. Also, Apple unveiled their new iPhone. Stock was down 2%. Often happens when on the Apple event days the stock ends up down, but that with the Oracle, and I think jitters going into today's critical data in here, which is the CPI data from the US, caused markets lower today, and we've had markets lower again this morning. We'll talk about that as we go forward. Not being helped markets this morning, GDP data out of the UK much worse than expected in here. We're expecting a slowdown on the month-on-month. The 0.2 came in at 0.5, so that's a real concern on the GDP. Also, industrial production missed as well. We did have a slight beat on the manufacturing production. So that data in here, not particularly positive this morning. And if we look in here this morning, US futures are lower, and also in here, the stock 600 in here. So this is European stocks in here, notably down this morning, 1% lower in here as traders brace for PCI. Markets boots bets on ECB policy tightening as the meeting nears. So we've seen a notable increase in risk. So look, traders ramped up bets. Price pressures will force the European central bank to hike rates at its meeting on Thursday, even as the German government was said to predict a contraction for this year. So there's fears and concerns, German government plus other sources in here looking for potentially for Germany to go into a slowdown, into recession. Also, it's mentioning the UK economy, shrank at the quickest pace in 6-7 months, which we mentioned there as well. But in here, look as well, here traders ramping up bets. We go and look at this article here. Traders flip to bet on ECB hike as inflation up ends rate view. Volatile rate bets are a sign of uncertainty amongst traders. So has been chopping around a bit. The ECB now expects inflation to stay above 3% next year. So this was out of the ECB. That's causing concern in the markets, in the European markets. That tomorrow, when we weren't quite sure which way the ECB are going to go. In here at the start of September, trades were firmly in the camp that the ECB would hold rates steady to keep in economic growth intact, with the markets reflecting 20% odds of a hike. But in reports of the ECB now expects inflation to stay above 3%, and they say it will be increasingly difficult for the central bank to stand pat. So increasing risk of a rate hike. Odds of a quarter point increase are around 2 in 3 at the moment. We've had a significant increase. Money markets pricing in 68% chance that the ECB raises rates by a quarter percentage point tomorrow. So a more hawkish tone potentially because of this higher inflationary pressures seen by the ECB, the slowdown in the UK economy in here, and also the slowdown in the German economy. Concerns about stagflation, inflation staying high, the economy slowing down, and then further rate hikes in here, further slowing the European economy. And as I say in here, that has been the tone through from this morning. And then that stock 600, that's the biggest 600 stocks in the eurozone in here, down 1% in here this morning, following US stocks lower yesterday. US stocks, as I say, concerned about those Oracle numbers, concerned about Apple, and maybe some jitters going into the US CPI today. So all of that playing out to a more negative tone as we go into a key piece of data. Now that can all flip around. So going to 5 things you need to start your day in here. The monthly report on US consumer prices, obviously right at the top in here, set to show a third month of subdued core inflation. So we're watching out for that. But for BP strategy, not worried about that. Carbon capture and storage, not too worried about that. It's not affecting what we're looking at. Futures and traders struggle for direction before US CPI. Well, they're not. They're actually down in here now this morning since maybe this was written. And then we've got some light data in here for mortgage applications, but it's all going to be on the CPI data that we have in here coming up. And just to go back and focus now on that data in here. So just under 1 hour in here, we have the US CPI data. Now, I need to go and quickly find this. I am on Schwab, what's it called? Schwab Network. Let me go and get the link for you guys. I'll stick it in stick it on the heads up and in the Discord server as well in here. But I'm on Schwab reacting to the CPI data that's coming up. Where are we in here? I need to go and find the link. I'm just doing that. You can't see. I'm just doing it off screen in here. So where are we? Where are we? I'll find that for you guys so you can see. You can watch it live here. Okay, so it's just quite simply schwabnetwork.com. So that's 45 minutes after the release in here. Let me copy the link in here. I'm going to put it in there. So if you want to tune into that, I assume that anyone can go into that Schwab Network and take a look. I am going to be on there at 45 minutes. So we have the data out in 1 hour. So where are we? That's we're currently 7:30 in. So 8:30 is the data in Eastern time. So it's going to be 9:15. So 9:15 Eastern time. I'll be on the Schwab Network, Charles Schwab Network in here, schwabnetwork.com. Take a look at that, reacting to the CPI number. So it's all going to be about CPI. I've always kind of shared some thoughts about what I think about the data and how it could affect markets. I think there's some key things in here to watch out for, and I'll just run through those in here now. So what do I think in here? Let me just have a look at the notes in here. I sent some notes across to Schwab actually last night, which I'm struggling to find now. Just bear with me a second, guys. Rather than going off piste, I might as well just... So technically, on the downside, I think we need to be watching out for the 44.83.74 area for the S&P and 15.324 200 zone for the Nasdaq E-mini. Those are going to be the key levels on the downside. Anything up through the recent peaks in here is obviously going to be bullish. On the fundamental side, it's going to be just how the market reacts to the CPI, right? We have had this kind of tone of strong data, weak economic, strong economic data, weak reaction from stocks in here. But it's a clearer picture with the inflation number. I think if we see above the 0.7, 0.8 level in here, so if we go and take a look at the actual data in here, I'm just going to open up what I've got. So in here, I think if we see the main headline number in here, you can see at 0.6 is expected. If it's at 0.7, 0.8 or above, then we're likely to see a notable sell-off in stocks. And then on the year-on-year data, if it's above, you've got 3.6 expected, above 3.7, 3.8. I think downside risks for stocks in here. On the core data, which is the ex-food and energy, we're expecting 0.2 in here. So I think if we see the market in here on the ex-food and energy data, what am I looking at in here? Above 0.3, 0.4, I think that's going to be certainly negative, and above of 4.4, 4.5 on the year-on-year is going to be negative, likely for stocks. Where do stocks react positively? Well, really, I think cooler in inflation, so 0.5% on the headline. In here below 4.5% on the headline, which is expected at 0.6, or on the year-on-year below 3.5 is probably going to be bullish for stocks. And on the core data in here below 0.1 or below 4.2 on the month-to-month and year-on-year, likely to be bullish on stocks. The other thing I want to point out is on the yield chart as well. So if we look at the yield chart, where are we? Yields in here. So I've got the yield chart in here. You see the yields ticking up in here at the moment. I've got a line in the sand just about where we are now. If it gets above like 431, 432, you see this impulse peak in here. We've been hovering below this level in here. Above 431, 432 in here on yields would likely see stocks sell off in here. And then if we get through 432, it's probably going to be quickly then up to here towards the 437 level on yields. So watching out for that on the US 10-year yield. On the downside for yields in here, below down here really, 421, 418 is going to be a trigger point on the downside. 421, 418 would then likely be a bullish for stocks. So just some levels to be watching out for. I know while we're just talking all of the technicals in here, just want to point out, this is not helping as well. Just oil pushing higher this morning as well, not helping stocks in Europe and the US overnight. And then if we go to the chart in here, where you see we're sitting right down on this support. We've been talking about this support on the futures. The lows here at 109.19 and 109.18.5. We're sitting just above those. Through 109.18.5 on the futures would be negative, and then quickly aim for the low, which is 109.09.5, and through there will be particularly negative also for. So those are the kind of the equivalent levels that we see on the treasury market. So watching out for those levels. Really, it's back above that peak there. Then would be bullish for stocks. So up, remember, higher in price, lower in yields, up through 110.10.5. Up through 110.10.5 would be bullish for stocks. Down through this low here, 109.18.5, and then the actual low at 109.09.5 on the 10-year future on the DEC contract would be very negative for stocks. So just watching out for all of those levels as we go forward into today. Just while I'm actually here on the charts, we might. So and so as I said in here, oil really not helping matters in here. The push higher that we're seeing in oil not helping matters for stocks in here. Obviously, higher oil potentially slowing the economy down, but also then adding to inflationary pressures. I've already mentioned kind of the key big levels in here. Really, it's down through this recent low in here. So down through, as I say, on the S&P 500 in here. If we get down through, just bear with me a sec. Down through support in here on the, let me just make this a bit bigger. So yeah, down through this recent low in here really is going to be the key trigger point on the downside. So we're watching out for that, that recent low. So on the downside, 44, excuse me, let's get this right. On the downside in here, I'm not sure if I got this right. 44. Oh no. Oh, I know why I see it. I've got the September contract. This is on the December. That's what I need to do. Sorry, guys. Let me edit up, update to the December contracts. One should be trading on the deck now. So let me just add that in. So yeah, down through here. So here's the support levels in here, 44.83 down to like the 74 level. 74 is a retracement level. If you go and take a look at the daily technicals in here, we've got an important retracement level at 74. So 44.83, 74 on the downside, just above the recent high from Monday in here. It's going to be the upside, initial upside trigger. So on the top side, 45, 43.5. I know those seem like they're a long way away, but we're likely to see quite a volatile move post CPI. So those are kind of the levels we're looking at, and then I need to add in the Nasdaq as well in here. Still got the September levels. Should be trading on the deck in here now, guys. Yeah. So in here on the Nasdaq, the support area in here really down towards the recent low. So 15.324 is around about the recent low, I think, in here. 15.352. So 15.354. And then it was also a retracement level, and down below there 15.200, also a retracement level in here. So watching out for those levels on the downside. Above the recent peaks in here, really above the highs here, this level here, 15.696, so really through 15.700 slash 15,730 on the top side would be more bullish in here for the Nasdaq. And I know they seem like wide parameters. You guys, I know, are sometimes trading on very short term, very, very near levels, but we're likely to blast through these potentially on the CPI data. What else do I have for you? I mean, it's all going to be about CPI today. I just got some other stuff to run through. So we've run through 5 things in here. Morning bid, CPI to set the tone. That's exactly what I just said. Future slippers, higher oil prices add to jitters. So we just covered that already. Rate hike concerns weighing on Europe. We've already looked at that. Stock 600 down. We've already looked at that. Traders flips a bet on ECB rate hikes. That's coming up for tomorrow. Country Garden in here gets respite as 1.4 billion of bonds extended. So this is the slowdown in the property market, and the Country Garden, one of the biggest property developers in China, in here, which is adding to the woes of the Chinese economy. That's a positive in here. And I've got in here, I don't know, only if you guys have got probably a subscription to Bloomberg, but I'll share this in here. So this is like an explainer how Country Garden plays into China's property mess. So take a look at that if you don't really understand what's going on in China with the property slowdown and how Country Garden fits into that. Take a look. More hawkish tones coming out of Japan in here. Potential for a rate hike coming up in here. And Bank of Japan Watch is now looking forward a rate hike, bringing forward rate hike concerns. And we've already covered this one. Traders flip bets to ECB hike in here. And we've already covered this as well. UK economy stumbles. So all of that, kind of covered pretty much what I want to cover in here, guys. It's all going to be about the data. I've given you those levels in here for me to watch out for on both the treasuries and on the equity indices, and then also on the data points, where above and below on the data points I think we're going to get either a bullish reaction or a bearish reaction. For me, it's the underlying tone remains bullish, but I think these are the kind of days you just go with the data. So going with the data as it comes out today, and catch me on Schwab Network if you can, schwabnetwork.com. That'll be 45 minutes after the announcement, after the data comes out. So as I said in here, that's well, let me get this straight. I always think of it in UK time, obviously having lived here all of my life. So we are at 9:15. I'll be on Schwab at 9:15 Eastern, 8:15 Central. All right, guys. Any questions? No questions. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Helmets and goggles on for the CPI data release. And remember, do remember as well, don't trade 2 minutes before and 2 minutes after, right, guys? Sorry, should have shouted that out at the beginning in here. 2 minutes before, 2 minutes after the data, no trading on the data, okay? Sorry, my bad. Should have called that out right at the beginning. No trading 2 minutes before, and no orders in the order book either. No trading or orders in the order books 2 minutes before and after the CPI release. All right, guys, have a good one. Take care.